All right, let's jump right into this explainer and demystify the absolutely massive Q1 2026 earnings report we just got from Gulfport Energy. Look, if you track the natural gas sector at all, you already know it's been a pretty wild ride lately. But Gulfport? They just posted numbers that literally have Wall Street doing a double take. So we're going to dig straight into the data and figure out exactly how they pulled this off. I mean, we are talking about a $165.8 million net income for the first quarter alone. When you stack that up against the slight net loss they took in the exact same quarter just last year, it is an incredible turnaround. Let's lift the hood and see what's actually driving this massive financial pivot. So here's our roadmap for today. First, the Q1 earnings surge. Second, their massive share repurchases. Third, the operational and drilling efficiencies. And finally, Wall Street analyst predictions. Starting with Section 1, the Q1 earnings surge, going from a slight loss to a massive windfall. You know, whenever a company completely shatters analyst forecasts, it's always best to go straight to the source. The headline numbers on this Q1 press release are undeniably strong, but the underlying metrics, they tell the real story of a company that is just firing on all cylinders right now. The contrast here is honestly pretty stark. Back in Q1 2025, they posted $197 million in revenue and took a slight net loss. But fast forward to Q1 2026, revenues more than doubled to $437.5 million, which drove that $165.8 million profit we just talked about. That's the exact kind of scale and leverage that investors absolutely dream about. Now, before we look at where all that new cash went, we really need to understand adjusted free cash flow. Put simply, this is the money a company generates from its actual operations after paying the essential bills. It's the cash left over to either grow the business or hand right back to shareholders. Honestly, it's the ultimate indicator of true financial health. And here is the magic number for Gulfport. They generated a massive $118.9 million in adjusted free cash flow this quarter. That is a staggering amount of capital being thrown off by their operations, and it gives the management team immense flexibility to execute their strategy, without having to rely on expensive outside debt. Which brings us to Section 2, massive share repurchases, how they're aggressively rewarding investors. The sheer scale of their buybacks is, well, it's staggering. They aggressively spent $172.8 million just eating up their own stock in Q1 alone. That's actually the highest quarterly repurchase in company history. And yet, they still have nearly $407 million in remaining authorized capacity. By shrinking that share count, they're making every remaining share that much more valuable. Zooming out to look at the longer-term trend, the commitment here is huge. They've bought back roughly $1.1 billion in common stock since March 2022. They are returning well over 100% of their adjusted free cash flow straight back to investors. That's a massive, massive vote of confidence from management in the intrinsic value of their own business. All right, moving to Section 3, operational and drilling efficiencies, basically the engine under the hood. Obviously, it all starts with output. In Q1, they averaged nearly 1 billion cubic feet equivalent per day in total production, heavily weighted at 91% natural gas. But what really juiced their margins was the pricing. The realized prices, including their hedges, rose to $4.42, so higher volumes meaning higher prices. That's your perfect recipe for a blowout quarter. But hey, this isn't just about getting lucky with commodity prices. It's about the hard science of drilling. They achieved an insane 50% improvement in Marcellus drilling footage per day. Down in their SCOOP operating area, drilling cycle times beat internal expectations by 25%. They are literally drilling faster, smarter, and cheaper. They even unlocked new dry gas locations in the Utica using these advanced U-development techniques. And they aren't just resting on their current assets either. By strategically investing $102.4 million over the last 4 quarters on discretionary acreage, they've added more than 2 years of high-quality drilling inventory. They expanded their Marcellus footprint to roughly 170 to 190 gross locations, essentially at zero incremental land cost. It's just brilliant forward planning. Let's wrap things up with Section 4, Wall Street analyst predictions. The market's verdict on Gulfport. Wall Street loves safety, and Gulfport boasts an absolute fortress of a balance sheet. We're looking at $772.2 million in total liquidity and a newly reaffirmed $1.1 billion borrowing base.
This provides massive operational security as they welcome their incoming CEO, Nick Dell'Osso Jr., to take the helm of a very, very well-capitalized ship.
Which brings us to the consensus from the analysts covering the stock. Wall Street maintains a solidly bullish stance here. Out of 13 top ratings, we see 7 buys, 6 holds, and absolutely 0 sell ratings, none. Analysts are clearly seeing the exact same operational and financial efficiencies we just walked through. But, ratings are only half the story. Let's talk about the price target. Against a current stock price hovering roughly around $178, analysts have set a really tantalizing medium price target of $245. That implies a nearly 38% upside from current levels. It's a clear signal that the market thinks this turnaround still has plenty of runway left. So what's actually going to drive it there? Well, analysts point out this optimism is fueled by some major macroeconomic tailwinds. Natural gas futures have broken above that crucial $3 mark. And that's being driven by rising summer cooling demand across the country, combined with structurally stronger demand for U.S. liquefied natural gas exports globally. With its 91% natural gas weighting, Gulfport is perfectly positioned to capture all of this upside. So when you put this whole puzzle together, an incredibly efficient operational engine, a fortress balance sheet, perfectly timed macro catalysts, and a management team completely dedicated to massive shareholder returns, we gotta leave you with this final provocative question. Is Gulfport Energy the ultimate energy play of 2026? Something to chew on as you review the data we've covered today. Thanks for joining me on this explainer, and keep learning